Hi, I'm going to share here a fundamental aspect of technical analysis that people usually don't talk about and actually point a fundamental flaw that exists in fundamental technical analysis. Fundamental technical analysis, they will throw you a bunch of patterns like tops and bottom patterns, and they say, well, look at this. This is a bottom, a top, and a bottom, and a top, and a bottom, and a top. And this is a price pattern that breaks out a range and retest, and you go long here, for example. Right. But the problem is that when you're going to trade in reality, price movement is not even close to be so easy to see as this bunch of zigzags here, right? It's much more erratic. It's completely, uh, let's say, it fools you to some point. Now, one must understand or create, let's say, a standardized way to define what is a top and a bottom. I'll give you an example. When you look at this price chart, there are numerous ways of seeing the movement in price here. You can be looking at this bottom, this top, bottom, top. This is a way you could read this market price, right? Now, another way of reading this market type is, for example, this way, looking at smaller fractals happening here. You see? So you can start to understand what is the fundamental flaw of technical analysis. They tell you that the price pattern exists, but they don't tell you how to detect these tops and bottoms. They tell you like, well, a pattern of a breakout with a top higher than the previous range and a retest is a retest of the previous top. But then what top? What time frame of the top? Do you understand that? Like they presuppose that you already know how to read the market this way. Well, I created my own tool, and it's up to you to create your own tool too. For example, here, what I like to do with my indicator is use my indicator to plot the tops and bottoms, and then what I do after that is just removing the candlesticks. Now, after removing the candlesticks, it becomes so much easier to see these patterns happening. Notice that it's still very erratic, right? But you can start to understand a little bit more how the price action happens. And you have to zoom in a lot. For my case, my indicator is like that. If you create your indicator, your fractals can be a little bit higher. For example, you can use, instead of the chart, I'm looking at the daily, I could be looking at the fractals of the weekly, for example. And you see that the move is different, you know? And the problem when you are doing it discretionary, like your own eyes, every day you are going through different emotions. Like you understand, you change the standard way of seeing the market. So you have to develop a tool for that, right? Now I'm going to go back to the daily here and show you an example of the pattern of retest trade, right? Now these patterns they work sometimes, they fail sometimes, but understanding it is the first step for you to know how to make in a quantitative way your back tests and build your own strategy, right? So let's look at this clear pattern here of a top and a bottom. You notice that at the moment that you have this breakout, you could tell that um, this bottom was violated, right? And probably it will be retested afterwards. And this, now you see that there's another difference here. When you look at these conventional technical analysis book, They will tell you that what the price does is directly this pattern here, right? And goes down in white. But that's not the case. Notice how this price action worked here, right? You have the first test, then you have a bottom, and you have a second test. Like these things, they mess up with your emotion, right? So this is where it diverges from the conventional technical analysis. And but it's interesting, and why it's interesting, because you can start to create like numerous ways of getting the statistics of different possible strategies. For example, you could actually build this pattern here in white. Look at that. You could actually backtest that, saying something like, well, if we break the previous bottom and we retest the price, but this retest here is like, I don't know, maybe getting the previous bottoms here and trying to match a possible channel that will probably hit the price at the top of the channel too, you know, something like that, and you can backtest it. So that's the grace. Let's say that's not the grace. This is why it's graceful to have a tool that will tell you what are the tops and the bottoms, right? Now I'm going to open here the candlestick charts again for you guys to understand the difference. Look at that. The candlesticks completely mess up with your mind, right? If you have some years of trading, it's easier, right, to identify these things. But if you don't have years of trading, the best method, and even if you have years of trading, the best method is to have a tool that will tell you the tops and bottoms. Standardized, no repayment. These are very precious tips, and I hope you can make good use of it.